First EDS, then Hewlett-Packard, and now Blackstone. This 16-year-old homegrown IT company has seen its third change of guard. After 2 years of negotiation, Blackstone has agreed to acquire a controlling 75% stake from HP in India's seventh largest IT company for over $1 billion. Yes, the company that we're talking about is Mphasis. And as Mphasis embarks on this new chapter in its life, we're forced to ask two key questions. Will Blackstone's boldest bet pay off? And will the new promoter succeed in erasing a weak 5-year track record? A lot of it will depend on the CEO, Ganesh Aiyyar, whose immediate concern, though by no means his only concern, will be to ensure a smooth transition. To answer these questions, we're now joined by the man himself, Ganesh Aiyyar, the CEO and Executive Director of Mphasis. Ganesh, before we get chatting about the company, let's quickly run our viewers through the deal contours. In 2009, Hewlett-Packard picked up a 60% stake in Mphasis and became a premier client for Mphasis. As of the Jan-March quarter, HP contributed to about a fourth of Mphasis' total revenues. But the problem was that when the stake was first picked up, HP accounted for nearly 70% of the company revenues. Apart from a tough global economic situation, one reason for the decline was that HP has been trying to sell the stake in Mphasis for a while now. Now HP has signed on the dotted line with private equity firm Blackstone. So Blackstone will pay HP 430 rupees per share for the 60% stake. In addition, Blackstone will make an open offer for an additional 26% stake at 457 per share for a total size of $1.1 billion. For Mphasis, the change in promoter comes with a sweetener in the form of a minimum revenue commitment of $990 million from HP over the next 5 years. Speaking on the future business, the arrival of Blackstone gives HP an opportunity to tap into Blackstone's portfolio of companies as a prospective client. And that's a gold mine as far as industry watchers are concerned. Hi Ganesh, this deal actually seems too good to be true. For 16 quarters, the revenues from Hewlett-Packard declined. When we last spoke to you, you had no visibility on when HP would bottom out, and suddenly come Blackstone and they've given you a $990 million revenue commitment over 5 years. What changed?
Actually, this is the breakthrough I've been looking forward to. Every quarter when I was asked this question, where is the bottom of HP revenue? When will the decline start? I was hoping we will get a breakthrough. Here is the breakthrough. $990 million of revenue committed over next 5 years is indeed one of the two highlights of this particular partnership with Blackstone. The second one being the portfolio companies having an addressable space of $1 billion. So as I said, I feel like a kid in a toy shop, excited. And I believe whatever you have heard and researched, it is true. I won't call it too good to be true. It is definitely a good breakthrough for Mphasis.
So HP revenues will bottom out in FY17. Give us a sense, because you've indicated that the revenues over 5 years will be on an escalating basis, accumulating to $990 million. So how much roughly in FY17, or would it be largely back-ended?
See, in Q3, our run rate was $220 million. Right. We have been experiencing 21% decline every year. If not for this breakthrough, and if we extrapolate that data, we would have arrived at roughly about $172 million. And if you average the next 5-year revenue, it gives you close to $200 million per annum. So even minimum revenue guarantee is actually a positive note for our revenue with HP. The second element is preferred partner. If we just deliver minimum revenue, I think we have failed. We need to go for more. So that is what is exciting for us, for employees, because they have dealt with this uncertainty. Now there is certainty.
This revenue commitment deals generally come at a cost. Can we say for certainty that the revenues from HP will not be margin dilutive?
Our model is not based on margin dilutive. And we are very, very clear that Mphasis has to tread a path of improving margins. So we will not enter into a transaction which fundamentally dilutes the existing margin profile of Mphasis. So you can be rest assured that this particular MSA is based on win-win between three parties, namely HP as the customer, we as the service provider, and Blackstone representing our future majority share owner and other shareholders too.
How soon will you be able to mine the $1 billion of revenues which you can get from the 80 portfolio companies of Blackstone?
As we speak, Reema, we are doing analysis of their portfolio companies. We will attack those 80 companies or select companies from that portfolio with our horizontal offering. Once we have done the analysis, we will have the battle plan ready. I'm hoping that we will go with guns blazing. We are creating a separate team to go after this business because it is a huge business, huge positive for us. We won't do it by spreading ourselves too thin. A focused team with focused effort. After we have done the analysis, we will staff it with the right talent. And let's see. I mean, our aspiration is not to wait for 5 years.
Now, speaking about $1 billion, you hit $1 billion in terms of revenue way back in 2010, and you're still somewhere there. Even, I was looking at the quarterly revenue run rate. In October of 2010, your quarterly revenues were at $290 million, and in December 2015, it was at what, $230 million? I agree that it's an account of the decline in HP, but there hasn't been growth in Mphasis. For the next 5 years, with Blackstone as a promoter and the revenue commitment that you have from HP, what will growth look like? When will the consolidated revenues of Mphasis hit industry growth rates?
We want to be and we will be a growth-oriented company at an overall company level. If you look at last 5 years, HP revenue used to be 72% of our revenue. Now they are trading at about 24% of our revenue. So from $700 odd million, they have dropped to $220 million. So instead of thinking like a victim, we thought, how do we solve the problem? So we grew the direct revenue stream. So even though we are at total company level...
But we still have to look at the company on a consolidated basis, right? So would you hit industry growth rates in FY17? Would it be 18? Give us a rough timeline.
See, if I focus on my personal aspiration, I would like to hit above industry growth rate in FY18. 17 because by the time the transaction closes, our preparedness will take time. In FY18, we should be touching the industry growth rate or should be above that.
Okay, that's very good to hear. What about the cash on the books? More than 100 rupees per share, closer to 112 rupees per share. What are Blackstone's plans with it?
See, cash strategy for us has always been influenced by our board. And what we are going to do is we are going to make that decision in conjunction with Blackstone post the close. I'm sure Blackstone has plans, we will have plans, and they would listen to our strategy and we will chart the course ahead. As of now, I'm not clear what's going to happen, but just stay tuned. Transaction will close in 3 months and you will have it. And I'll make sure you get the call from me.
Speaking about uncertainty, I think your shareholders would also like to know that what changes Blackstone plans to effect now in Mphasis. They must have given you some time. I was reading somewhere that Blackstone has this 100-day strategy where they either restructure the board or they fix the processes, which will determine how the next 5 years will be. See, what is the communication to you?
What will happen is we will identify certain success themes which will take us towards breakthrough success. And around those success themes, we will double down collectively between Blackstone and us to see how do we ensure those themes succeed. So that gives us the breakthrough results. And I'm looking forward to having best of advisors helping us to navigate those success themes.
What about attrition then?
Attrition of employees?
Yeah, would they be looking at scaling down some sort of a cost cutting to improve the company margins?
I think this is going to be a growth-oriented partnership. So focus has got to be on how do we generate greater revenue and relevant revenue. Now, as far as margin improvement is concerned, we have always been on that ever-accelerating treadmill. We will continue to stay focused. If there are better methods to increase our productivity, we would be all ears. But the focus has got to be growth, relevant growth, specialized growth, because industry is facing uncertainty of digital revolution which is unfolding.
So apart from hitting industry growth rates or beating it in FY18, in terms of a financial improvement, what is it that Blackstone, what is the targets that Blackstone has set out for you all?
We want to be seen as a winning company.
Truly, what does that mean in terms of numbers?
I'll share that. We want to be in the top quadrant of generating shareholder value and growth. Okay. That is our aspiration. Now this platform of partnership with Blackstone gives us that opportunity.
On that optimistic note, it's time for a very short break, but we have a lot more questions for you in terms of the transition that you plan to effect at Blackstone, as well as the key changes Blackstone's might effect after we return from this very short break.